All right, let's dive right in. Today, we're doing a technical deep dive on the electric vehicle maker NIO. We're going to break down what the charts are really telling us about where this stock might be headed next. First things first, let's put a number on the board. As of this analysis on February 24th, 2026, NIO is trading at $5.31. Now keep that price in your head because it's going to be important as we unpack everything else. You see, that price puts NIO at a really interesting crossroads. So the huge question we're tackling today is pretty simple. Based only on the technicals, where is the stock going from here? To figure that out, we're going to start with an overall health check of the chart. You can think of it like a single report card grade that sums up all the different signals we're seeing. And that grade is a 57 out of 100. So what's the deal with that? Well, it's not amazing, but it's not terrible either. The source material calls this a neutral, but maybe slightly positive rating. Basically, the chart isn't shouting buy, and it's not screaming sell at this very moment. You might be wondering, where does a number like that even come from? Well, it's not just pulled out of thin air. It's actually a composite score that takes a bunch of classic technical indicators, weighs them, and mashes them all together to give us one quick, easy-to-understand snapshot. And here's what's under the hood. As you can see, it is a real mixed bag. The MACD, which is a momentum tool, gets a perfect score. I mean, that's incredibly strong. But then you glance over at moving averages and volume, and yeah, they're looking a lot weaker. This kind of internal tug-of-war is exactly why that overall score lands smack dab in the middle. Okay, so we've got all these scores and numbers, but let's be real. What do they actually mean for the stock? Let's translate some of this technical speak into plain English. First up, the RSI, or Relative Strength Index. Think of it as a momentum gauge for the stock. NIO's is sitting around 64, which is pretty much neutral territory. The big takeaway here is that the stock isn't considered overbought, but it's not oversold either. There's just no real intense pressure pushing it one way or the other right now. Next, let's talk moving averages. These basically smooth out all the noisy price action to give us a clearer picture of the trend. And here's where it gets kind of interesting. Remember how the short-term score was low? Well, despite that, the analysis of the longer-term trend is actually considered bullish. This suggests we might be seeing some short-term chop, but the bigger picture could still be positive. And this quote from the source really nails why we even bother with all this stuff. None of these indicators is a crystal ball, right? But what they can do is give us clues about where the so-called smart money is placing its bets. And that's the thing. How you read these signals really depends on if you're in it for the short haul or the long game. Let's look at how this same data can lead to two totally different strategies, one for a trader and one for a long-term investor. So on one side, you've got the trader's playbook. They're zoomed in, watching super specific short-term levels like the 50-day moving average, and they're waiting for a spike in volume to confirm a move. But then you have the investor. They see this neutral, kind of weak period and think, maybe this is my chance to build a position at a decent price. Two very different perspectives from the exact same chart. And when it comes to the long-term investor, the analysis is crystal clear on this point. The signal isn't to sell, and it's not even a screaming buy right now. The signal is simply to hold. Okay, let's get down to brass tacks. This is the most practical part of our breakdown. Let's pinpoint the exact price levels that the source says we need to be watching. These are the lines in the sand. First up, we've got the ceiling. That resistance level is sitting right at $5.34. This is the price point the stock is really struggling to punch through. And on the flip side, we have the floor. That's your key support level, down at $4.38. If the price starts to fall, this is the spot where buyers might just step in and prop it up. And finally, $4.87. Remember that 50-day moving average we talked about? Well, here it is. The analysis flags this as a really critical level, especially for traders. If the stock breaks below this, it could be a sign of more weakness to come. All right, so we've looked at the big picture score, we've dug into the individual signals, and we've mapped out the key price levels. So what's the bottom line? Let's bring it all together. The big takeaway here is that the chart isn't signaling a massive crash or a huge rally for tomorrow. Instead, what we're seeing is a stock that's, it's coiling. It's trading sideways, stuck in a range, just gathering up energy for whatever its next big move is going to be. And that brings us to the final thought from this analysis. This quiet period, this consolidation, this is exactly when you should be getting your game plan ready. Knowing these key levels, understanding these neutral signals, it means you can figure out your strategy before the action happens. So the analysis leaves us with one last really important question. What's your plan?